Now, South Africa's headline consumer inflation has slowed more than expected to 5.6% year-on-year in May from 5.9% in April. On a month-on-month basis, CPI stood at a negative 0.3%. Joining us now to unpack the numbers is Dennis Dykes, Chief Economist at Nedbank. Dennis, thanks for your time. I've been reading the headlines saying everybody's been surprised. Were you amongst those that were surprised, particularly by the month-on-month number sliding into negative territory?
We actually had it reasonably okay. We were saying 5.7%, so
right,
just a little bit higher. The main reason, of course, being the petrol price coming off during the month. I think where the surprise came is that food prices were flat, and
right,
and generally I think people were expecting food prices to be moving higher. And then I guess people are expecting some sort of effect now coming through from the weak rand. But typically that takes a while to come through.
Mm-hmm. What are your thoughts then on, in terms of the rand outlook right now and all the dynamics playing into it? How are you factoring that into your models? I mean, what are your rand forecasts? How sensitive is inflation going to be to kind of varying degrees of rand weakness?
Yeah, look, we've got the rand weakening in the short term and then pulling back a little bit towards year end. The danger is that it consolidates at around about the 10 sort of level, because then you start to see continual pass-through effects being factored into the figures. And then I think the market's in danger of having completely underestimated inflation, because inflation forecasts haven't changed all that much. I think it's a combination of growth weakening, so that so-called output gap, which the Reserve Bank governor speaks about so often, that's containing inflation. And we've had some negative surprises, some positive surprises on other factors, as I said, like food. But the big danger now is that the rand actually doesn't pull back much at all, consolidates at 10 or even worsens, and then you could see inflation, peaking at above 7% or even higher.
Yeah. Just going back to that number on the month-on-month basis, was that a big shock for you guys? And also, just how sustainable do you think it is, particularly in this environment where we've got the currency weaker and many people, you amongst others, are saying short-term this currency is likely to weaken from here?
Look, I mean, we knew that the petrol price had come off. I think it came off by over 5% in the month. So that was a big contributory factor to the number coming, the month-on-month being in negative territory. But we also know that the petrol price over the next few months is going to go higher.
80 cents we've already been told. Yeah,
absolutely. Oil price has been fairly steady, but on the other side you've got the rand taking a bit of a knock. So that is going to feed through, and we will see higher figures coming through.
So consumers feeling the pinch, businesses are certainly feeling the pinch here in South Africa. Winter electricity prices is also something we're having to look at. How is this all playing into how, firstly, from the consumer perspective, the SARB is viewing the health of the South African consumer? Because a quarterly bulletin just released this morning.
Yeah, I mean, the quarterly bulletin is not all that encouraging as far as that's concerned. Consumer spending slowed to just above 2%. Now, a few years ago, we were looking at 5, 6, 7, 8% per quarter, sort of annualized gains. And that's pretty much in line with disposable income. Disposable income has really, we estimate for this year, is only going to expand by about 2% in real terms. That's money in the pocket. So the only other way that the consumer can compensate is, of course, by borrowing. And there the channels are fairly limited, and the costs of borrowing have actually risen quite a bit because of the change in the mix of borrowing. And it's interesting, in this quarterly bulletin, the Reserve Bank for the first time tries to compensate for the change in the mix of borrowing from just mortgage-related borrowing to personal loans-related borrowing. So the debt service cost ratio goes up quite a bit in this particular, in their calculations. That's, in my view, it's actually still too low, but nevertheless they try to compensate.
They're trying to basically say, yes, we have seen a shift, and acknowledging that, but you say that they need, there's more work to be done.
There's more work to be done. In my view, quite a bit more work to be done, because I think what they have done is they've compensated for personal loans, some element of personal loans, but they haven't compensated for the spread going from well below prime to above prime on other forms of borrowing.
Yeah. What have you read in the current account deficit coming down 5.8% versus 6.5% previously? There was a very large difference between the Reuters consensus forecast and the Bloomberg consensus forecast. But the suggestion seems to be that the weaker rand is working, or is that more a function of imports slowing down?
Yeah, look, I must admit I'm still a bit puzzled. I've been looking at the numbers. The main difference, the main reason for it coming down was a massive increase in dividend receipts by local investors.
So the Africa dividend is playing off.
Well,
Wow.
why it would just play off in one quarter, I'm not too sure. I mean, to give you an idea, it rose by about 23 billion to about 70 billion. So that is just an enormous increase. We haven't seen anything in history that even remotely resembles that. The weaker rand certainly doesn't play in these numbers yet.
Sure.
So, I'm just very, very puzzled. And the further puzzle is, if you look at the national accounts data, the net export figure actually deteriorates both on a seasonally adjusted as well as an unadjusted basis. So there does seem to be something odd.
Yeah.
We know, of course, there was a little bit of a balance in manufactured and mineral exports as a result of the strikes coming to an end and so forth. But even there, if you go back to the regional trade data that produced by SARS, the numbers don't seem to be anything like the figures that are being produced.
I think we need to put a call through, ask the producers, put a call through to the governor and try and find out what's going on there.
Well, I just think you have to be cautious about this.
Yeah.
I certainly don't think this is now the start of an improving trend.
So there's certainly an anomaly in this data, and we know that current account figures are hard to forecast from any 1 month to the next. But the overall trend has obviously been the fact that we are facing a widening current account deficit. It's something that Treasury flags. It's something that certainly the finance minister often speaks about. And interesting, yesterday he spoke about quantitative easing, what that means for South African revenue collection, and of course rand weakness. I mean, what did you make of some of the comments he flagged yesterday around Ben Bernanke and the tapering off of stimulus to the US economy?
No, look, I think he's very right in the sense that for the past few years we've actually had this massive cheap source of funding from abroad. And we've seen billions and billions of rand coming into the local bond market, which has helped us finance our debt. And clearly, if we do go into a period of some tapering off on the quantitative easing side, particularly from the Fed, the implication is that we will find it a bit more difficult and a bit more expensive to actually fund our deficit. So he's absolutely right, and he's absolutely right to express caution in Parliament and amongst his cabinet colleagues, because they have to make the changes.